From Barangaroo Studios, this is the COB, brought to you by eToro. Invest in ASX shares with $0 commission.
Well, hello, this is the COB, a truncated one at that because we do have the last call to get to. But I'm Kyle Rodder, of course, here with Danny Akuye. Danny, it looks like we'll probably end the week a little lower.
Well, no, we're kind of almost 0.2% up at the moment. So
for the day, for the week,
for the day,
maybe a bit lower, I think.
Might be a bit lower. Yes, I haven't checked. Yeah. Apologies.
No, that's all right. I shouldn't have thrown that at you. But we'll get what we have been looking at today by way of three themes. It's a nice little place to start because it does seem like we will end the week down by about 0.2, 0.3%. But that's sort of a late fade, I suppose. But you know, some of the things that we have been tracking more than just that. Tech this week has really shot the lights out. That seems to be pretty consistent. But we're all, as always, interested in interest rates because we do have that RBA and Fed decision next week to, get ready for.
PCE tonight in the US.
Exactly, and that will be so crucial as to what the Fed potentially does. Of course, markets are pricing in that 25's in the barrel, but could there be another 25 after that? Will it be higher for longer? All of these conversations will be had tonight and into next week as well. So there is that, and a lot of corporate news too. And
a lot of corporate news, a lot of quarterlies this week, and obviously stock of the day. My gosh.
Yeah, exactly.
Wow.
We were looking at Megaport. Is this one that you've followed much? Because
no.
I only follow it because it seems to be incredibly volatile, incredibly sensitive to the narrative.
Yeah.
And today it was up quite considerably, but it has to be said it was quite a low base that it's running.
Correct. I think they're back to their March levels today. So it is very volatile. So you've got to have a stomach for that volatility. But maybe we can see what our guests of the day, Josh Barker and Grady Wolf.
Wolf, yes, they were joined Koshi today for stock of the day. Megaport. Here's what they had to say.
CEO as well has just stepped in recently, so it could be a transformation time for the company, and they could be starting at the bottom and hitting the ground up. So it's an exciting outlook for the company. But yeah, we do like the fact that they're in the tech space. Tech is getting momentum again this year. So yeah, it could be a buy rating soon, but at the moment it's just a neutral.
He's come in at the right time, I'd say. This was largely expected, their shift towards profitability. And that's what a lot of the larger tech companies here in Australia are having to do. The access to capital is really dried up. So we've seen names like Xero really start to switch towards profitability, which Megaport was obviously forced to do. It's up 40% today. It's clearly a good announcement. It's better numbers than what they were previously guiding the market, but it's still back to the price that it was at the start of last month. I'd actually sell on this news. Just look at alternatives like Xero and realestate.com.
Interesting. So I'd say a fairly neutral tone coming through there. And I think Josh's point at the end, which was, there might be better opportunities to play that tech space. Going to your point, Danny, before, pretty volatile. So you have to have a stomach for that volatility if you do want to invest in it. But, today's short and sweet. And we're going to bring in now Shane Oliver from AMP Capital, as he does every week, to run us through the week that was. Shane, great to get your insights as always, and great to see you there. It's been a bit of a late fade towards the end of the week. We're looking down the barrel of a big week of central bank meetings. How did you make, what did you make of the week that was? Because it would seem that maybe sentiments are getting a little more bearish at the margins.
Yeah, it sort of started off pretty messy, particularly in the US. Obviously, we've got those ongoing bank issues, and that weighed on the US share market quite heavily and also flowed through to our market as the week progressed. We did get some good news on local inflation falling, but I think global factors probably dominated. Then, of course, overnight we saw that strong rally in the US share market on the back of good tech earnings. Obviously Meta, and then earlier in the week we had Microsoft and Amazon, and I think aftermarket Microsoft and Apple, and aftermarket we've had Amazon and Intel, I think. So there's been some good news on that front, but it does seem as if markets are sort of feeling a little bit nervous about things. I think so far this week the US market's very flat, and our market's down slightly. So those concerns are still there. Obviously, recession worries, debt ceiling in the US, bank issues, they're still there. But one big thing holding markets up has been good earnings, particularly out of the US so far.
Yeah, and Shane, we've obviously got the PCE out tonight in the US. It may not be a market-moving event, but what are you seeing for the RBA, their meeting next week? Do you think they're going to sit on their hands again?
I think they probably will, and it looks like that's now consensus, just looking at a survey from Reuters I just happened to see then. I think out of, could have been 25, 30 economists, there was only about 8 looking for a hike, the rest were on hold. Look, it is a close call. Obviously, the Reserve Bank still sees inflation as being too high. They are concerned, according to their recent minutes, about the surge in population growth adding to housing inflation. They also might be a little bit concerned there that the negative wealth effect of falling house prices might be giving way to a positive wealth effect of rising house prices. They're also concerned about wages growth. So those things are all there, but by the same token, we haven't really got a lot of new information since the last meeting. We haven't got an update yet on retail sales. That won't come out till Wednesday of this week after the meeting. And we did get those good inflation numbers coming in on the low side. They're not good in the sense that what you would normally regard as good, but they're good relative to the December quarter. And so that, I think, is a good sign, and it does provide the Reserve Bank with flexibility to remain on hold to better assess the outlook, which is what I think they will do on Tuesday. Remain on hold, probably keep the tightening bias, and indicate that they're continuing to look at global growth, obviously inflation, labour market and household spending. But basically our view is that they will leave rates on hold, and that I think would be the right thing to do as well.
As Danny said before, we do have that PCE index reading, which will really shape how the Fed, approaches this next decision. Markets are more or less pricing in that 25 basis points, but you've got cuts still pricing marginally at the back end of the curve. There's a sense that, well, there could be the need to go higher, still at the very least hold it higher for longer. So, I mean, what are you going to be expecting out of the Fed next week? What are you going to be listening for, especially when it comes from an investment strategy point of view?
Like, it's going to be an interesting one because I think from memory this takes them, if they do go 25 basis points, which is 70% priced in by money markets and pretty much the consensus, then that will take them to the top of the dot plot that they updated earlier this year or back in March. So I think that would probably be it on the basis of what they've indicated so far. We are seeing more evidence of a slowdown in the US economy. It's a bit hard to read too much into that GDP data that came out overnight because it was distorted by inventory and a big surge in consumer spending at the very start of the year. But the evidence suggests that things are cooling down. We are seeing a fairly decent decline, I think, in US inflation. Goods price inflation led on the way up. It's now leading on the way down. And that, I think, will provide scope for the Fed to do a hike. And then when you put that together with the banking issues, signal that's probably the top. They'll probably maintain some sort of tightening bias, signaling they may have to do more, but I think it will become less strident. Obviously the banking stresses are a factor in all of this. It's not as mainstream as it was a month or two ago. The Fed probably feels a bit more relaxed about it than it did, but I reckon this week they're feeling a bit more nervous about it than they were a week or two ago. Obviously, the issue is still there with First Republic, and who knows who will be next as that continues to unfold. But that is going to be akin to effectively a monetary tightening by the Fed as lending standards tighten. So my feeling is that they'll probably do 25, but obviously you've got to watch the wordings around their forward guidance and also what Powell says in his press conference in terms of how hawkish or dovish he might be in terms of his comments.
Yeah, absolutely, because sometimes he likes to, knock the market on the head after it's been for a bit of a rally, because obviously the wealth creation. What about the debt ceiling? Are we going to have a 2011 rerun that we saw before under the Obama administration, or is it going to be more amicable?
Well, I hope it's going to be more amicable, but I don't see the evidence of that. You go back to 2011, I mean, that was quite a slide there, 20% or so, 20% or more, I think. And a lot of it occurred, 60% of the slide occurred after the debt ceiling was increased. That was when S&P downgraded the US's credit rating. But more importantly, the market started to focus on austerity as the deal to raise the debt ceiling led to cut back in government spending, and that obviously weighed on the market. To be honest with you, this time around we're faced with a very conservative Republican members in the House. I was pleased to see that House Majority Leader McCarthy actually managed to get a deal through, because if he couldn't get a deal through, the Republicans on their own couldn't agree to anything, then how will the rest of the relevant people in the US agree to something on this issue? So that's a positive sign, but we've still got a long way to go in all of this. It is in the interests of Republicans to see the US economy go into recession, but they don't want to push that too far, because Americans might blame them if a debt ceiling debacle is the cause of a recession. So there's a bit of a balancing act for them. By the same token, the Democrats don't want to cut back government spending, but I reckon they realise that ultimately they'll have to compromise on this. So I think we will get some sort of compromise solution, but it won't come until the last minute, and we will see the normal concern going into that ex-date, whenever that is. The Treasury might say it's in June, but I reckon it's probably still going to be in July sometime. So a bit of nervousness into that, and maybe a little bit of nervousness afterwards as the market again focuses on government spending cutbacks at a time when the US economy is slowing. And the other thing which gets a bit complicated here, and that is that the liquidity backdrop for the US market might turn a little bit negative on the back of this, because right now the US Treasury is drawing down on its deposits at the Fed and pumping that money into the US economy in the form of government spending and welfare payments and so on. Once the debt ceiling increases, they'll go back to borrowing money and sucking money out of the economy, so the liquidity boost will suddenly evaporate. So that will also be a bit of a drag the other side of that debt ceiling decision sometime in the next couple of months. So I suspect at the end of the day it's going to cause a bit of volatility. After the 2011 and 2013 episodes, raising the debt ceiling was relatively calm, partly because a Republican was president for some of those years, but I reckon we're now back to something around what we saw in 2011, maybe 2013.
Dr. Oliver, great insights as always. In the interest of time, have to wrap up for today, but have a wonderful weekend and we'll talk to you next week. Dr. Shane Oliver there from
Thank you.
You too, thank you. Take care, bye-bye.
All right, let's jump straight to the leaders and laggards. Okay, so let's go and see the leaders and laggards now, starting off with the leaders. And, well, I suppose Megaport will be up the top there, 41.2%, if you don't mind. But Pilbara.
Yeah, Pilbara, obviously the market liked the update on that one. They did say, though, that they're expecting lithium prices to continue to weaken until some of the Chinese battery manufacturers deplete some of their inventories. But you know, good results, even though, you know, it was a decline in revenue, was a decline in average prices, but it's all about what's expected. And clearly this was better than expected. Reliance, also a bit of an update in the market, and we also had quite an interesting chat with Jason Tay today about that stock, and he sees that one as definitely one worth having a look at.
Really?
Yeah, for the recovery in new housing stock.
Interesting.
Yeah.
Okay, so it's a housing story, is it?
Yeah.
Okay, very interesting. And yeah, we've also seen Paladin there as well, up by almost 4%. Life360, one company that has, well, I suppose always been very generous with their time with us, also higher for the day. Let's have a look now and go to the laggards. And there we are, Syrah Resources dropping. Now, we were talking about Syrah Resources yesterday after that update. It delivered also, mentioned a bit of a cost increase as well associated with one of its plants in Louisiana, if I'm not mistaken. It just seemingly extending that drop. So that's down 11.5%.
Yep.
Nothing that we could see today necessarily.
No, I think it could be maybe a flow on there with some of these companies having, you know, quarterly updates and things. Ampol, I think, also had an update, and the markets obviously responded to that. Interestingly, Telix Pharmaceuticals made that small acquisition in the AI space in Germany, and you know, maybe people are just saying, wow, it's just run so hard, we'll take some profits on that one now.
Well, that's the thing. I didn't see the details of the deal, but I don't know if they're paying for it via their own shares or funding it some way like that. But there's always a circuit breaker. We've been talking for a few days now that Telix has run up almost 20% after reporting that trading update, and well, it would seemingly have put the kibosh on that perhaps, but you know, again, if you're an investor in Telix, you wouldn't be too dissatisfied with what you've got so far, a modest 3.4%. Otherwise, a bit of a materials focus today when it comes to the sale of Capricorn Metals on there, as well as Syrah Resources. And last but not least, let's just quickly have a look on what's going on overnight. There's your small cap plays. We won't emphasize those too much. We'll leave those to another week, another day perhaps, but what's on overnight now, and well, we said it before, PCE index, but also a couple of results from Chevron and
that'll be
ExxonMobil.
interesting. Oh, well, that'll be very interesting. Yeah, because obviously they were the winners last year, haven't been winning this year for obvious reasons. We've seen weakness in the oil price, etc. But yeah, I think the market will be looking for some indications of what's happening in the oil space.
Yeah, without a doubt. Two of the world's biggest energy players there reporting tonight, so it could be interesting. But hey, we've run over time, so in the interest of that, we will wrap it up there. Remember, you can catch up with all the views and interviews on our website, and over the weekend, stick around. We have the last call coming right up.
The COB is brought to you by eToro. Invest in ASX shares with $0 commission.